Hello everybody, welcome back. Thank you so much for being here with us today. I have the pleasure of introducing you to Greg Prutzman, who is a loan officer, and today we're going to talk about the different types of loans that are available out there for you. So thank you for being here.
Thanks for having me, George. Much
Now,
appreciated.
One thing I didn't mention is that Craig is also a U.S. Navy veteran. Pretty awesome stuff.
Yes,
and we
sir.
met while he was doing a mortgage for I think it was an Army veteran.
Yes, it was.
Awesome.
Recently
So,
retired.
Recently retired. Great family.
Yeah, it was.
But thank you again for being here today.
Again, thanks for having me.
My pleasure. So, Greg, tell us. I mean, there are how many different types of mortgages that a person could apply for?
Tons of types, but as far as
The
the
most
VA,
common ones.
most common
are
ones, conventional,
conventional?
FHA, USDA, and VA.
All right,
Be your
so-
four most common types.
Let's talk about the VA loan a little bit.
Sure.
Right. So, who is eligible for a VA loan?
So I would encourage anyone who's served any kind of active duty time to at least try to apply for the VA loan. What happens is we'll put your Social Security number into the Veterans Administration, and they come back with what's called a certificate of eligibility.
Okay.
And just to give you an example, I had a young man. He did about 2 months, and he was in boot camp. And he was injured in boot camp and couldn't
wow.
finish training through no fault of his own. So he received a discharge, I believe a medical discharge, but his eligibility came back fine, just like he had served, 2 years, 4 years, 6 years. So he was eligible. So I would
That's
encourage any vet that's spent any time, definitely active or reserves, to at least try. There's no harm in trying. Get that certificate of eligibility, and we go from that.
That's pretty promising. So there's no reason for anyone who has actually been a member of our armed forces to not have a home of their own.
Honestly, it's the best program of the four out there. The big difference, if I can elaborate a little bit, why
Please do.
VA is so good. The VA actually guarantees the loan to a certain percentage. The government is going to back all the other types of loans. They're going to insure, back up all the other types of mortgages in the country, but the Veterans Administration guarantees a certain percentage to that lender. So the chances of the investor losing any kind of money, on that deal, and the VA is going to back it and do everything they can to keep that vet in the home and their family. It's a very strong product. If we can go VA, we've got to go VA.
If you were never in the service, there are other options if you're actually looking to buy a house and you have very little to no money down, right? And that's the USDA loan, but that is actually centered around living in a specific area.
Correct.
You can't buy a house with a USDA loan if you're looking to move at Center City of any specific area. It's more of a rural area.
Yeah, this is true. Rural, you go in and you put the zip code in, and you look at the specific area.
Right.
What some people might consider rural, like the countryside,
Right.
farmland and such. That's how it started. But now, again, just like the VA loan, it doesn't hurt to check and see what exactly qualifies. I mean, we go into the government website, plug in the address and the zip code of that area, and see if it qualifies for USDA. Again, they do 100% financing on those. The restrictions, the ratios, affordability ratios, what that person's bringing in to the transaction in the beginning, their amount of debt, and when they are done after their mortgage payment, those are a little bit more strict with the USDA than the VA loan.
Right.
But again, a good program. Just the backing of the 100% financing, through the government is awesome.
And one of the most common ones, I guess, will be the FHA loan, and sometimes people are actually misunderstood because FHA is just an insurance.
Correct. They back mortgages.
Right.
Insure, as I mentioned earlier about the difference between insuring and guaranteeing. The federal government insures the mortgage so that there's some coverage there. So there's a...
Since you're not putting 20% down.
Yeah.
So that's actually a good way where you could come out of pocket with 3.5% of your own money for your down payment. And then, of course, there are options of assistance towards your closing cost.
Sure.
But then there are new products now too that are conventional where, depending on, I guess, your qualifications, you could do 3% out of pocket and not have as much assistance, but still be able to.
Yeah, Home Ready is a good example of that. It carries the same low investment, the 3.5% down to get you in. Qualifications, let your lender take a look at your whole package. Is what I would strongly encourage. We'll find you the best package, the best deal, the best rate. If you're light on down money, we'll find you something with a low down payment. If you have plenty and you want to get rid of that PMI, we can also find ways around that too. We can, if you want to pay up front, if you can afford to put the 20% down to avoid PMI, then great. Whatever's most important to the borrower, we'll look at the whole package to determine the best fit.
Excellent. So if, as Greg said, if you are working with a lender and, make sure you ask the right questions. That's always very important. Make sure you know what you qualify for. If you're not working with a lender and you're looking to get pre-approved for a mortgage, you could always give Craig a call as well. But thank you again for being here with us today. Thank you for watching. Greg, thank you so much for taking of your day
Thanks for having me.
Educate everyone out there who's watching. Enjoy your day, and I hope you've enjoyed this episode.